want to say welcome to everyone. This is a an exciting webinar as always every Wednesday, and as Eddie alluded to, it's season 2 already, and it's already May. Cannot believe it. It's insane. We are pretty much we got one more next week, and then we are gonna start talking about all the webinars that we're gonna do for you that we have ready for already for the month of June. So thank you all for sticking with us. Most important, thank you for making time and being here with us on this beautiful Wednesday evening. So today's topic, it's a very important one. It's navigating life transition strategies for financial stability. It is a great topic. I think we mentioned this. I want to say about a month or two ago. We are always open to suggestions. If there's any particular topic that you might be interested in, feel free to send us feedback. Definitely love to hear feedback. And if you have any suggestions, any particular topics that you want to listen to, you know, we are all ears. We have an amazing team here. Every content, all the content that you see here is, believe it or not, is organic. Um, Eddie alluded to, the person responsible for putting all these beautiful graphics is none other than Kerry Lazar. And we truly mean it when we say that, we are a credit union that is dedicated to its members. And we have a motivational speaker that we work with, and he's one of his favorite words is "no members, no credit unions," and we really live by that. So again, thank you. So with that being said, let's go ahead and focus our attention into the presentation for today. More than a presentation, I actually like to call it a workshop because we are going to cover 5 steps. When anyone is facing any financial transitions, and we all know that transitions in life impact our finances, whether they're foreseen or they're unexpected. And for some, we understand that they can be a very challenging time. So we're going to talk about different types of transition, how you can prepare for, how to manage a transition, communicating through the process, managing debt, and accessing resources. And at the end, we're gonna take some time. As always, it is our commitment that we answer every question live. So whatever question you have, please feel free to submit them, send them over, and we will not let you go before we answer every single question. We'll also like to add that, and thank you, Carrie, for putting together a workbook. This workbook is called Aligning Priorities. This is a great tool that we want to share with you. Our team is going to share the link on the chat, so you can, if you click on it, it's gonna take you straight into the workbook. And this is a great resource, like I said, that might be a great way to start, especially if anyone is going through a particular transition today. And you don't know how to start. This book will answer a lot of questions for you, and will be very helpful. I would also like to add that we are going to share the presentation with everyone that registered today. So we will also provide the link on the presentation once we email it over, most likely tomorrow or in the next few days. As always, that is something that we commit to before every time we do a webinar here at the credit union. So this is the agenda for today. So let's talk about this, right? Transitions to prepare for. There are many transitions in life we want to celebrate, and for good reasons. I think this is important to know. However, how we manage the transition once the celebration is done may have a financial impact in the future. So that impact might be a negative or positive. It all depends what type of transition and then where you are in life, right? So that's something that we do want to make clear. So we're going to start by discussing several transitions you may experience in your life that can be prepared for in advance, and review the various steps to take to do so. And know this, understanding this can help you make informed decisions and be better prepared for the future by setting yourself up for financial success during the next stage. So the first transition that we want to talk about, and I think this is perfect because I'm sure I have seen a lot of high school graduations, I'm sorry, this week, and I'm sure this is just the beginning, if not maybe coming to the end. I know for many schools, the end of May, early June is pretty much graduation time. As a matter of fact, I'd like to give a big shout out to our very own Kim Friendly, who's actually attending a high school graduation today, and that's the reason why she couldn't be here with us this evening. So we all know that high school graduation, it could be the first transition that you're going to experience as a young adult. And obviously, you have a lot of big decisions ahead of you. So if you're in this phase, there's a lot, pretty much you're most likely getting ready to turn 18 or you're already 18. And you have so many big decisions, important decisions that you had to make as to what are you going to do next. And let's be honest, most kids are thinking about their financial situations as they come to the end of the high school. They might have thought about either plans to go to college or perhaps get a job, but probably they haven't thought about how they're going to pay for things they will need, such as housing, food, or books. Without a plan, they may commit to things they can't afford or take on student loans they can't manage. As we continue our conversation, many of the items that we're going to discuss is going to help us prepare for a transition that is going to apply to everything, including this one that we're talking about, which is the high school graduation. So, and a little more into this first transition, we all know that if the high school grad decides to pursue their college degree, and most likely, that's going to be the right path to go. But we all know that college is expensive. It's a lot of financial aspects that come into that whenever you're making that decision. So you will likely are not only are you going to be thinking about school, but perhaps getting a part-time job or maybe a full-time job. It all depends. And hopefully you're going to start earning more money for you to cover some of the expenses that you're going to encounter once you're in college. Or if you decide to go to a trade school, whatever situation you're in. So definitely something that you do want to take into considerations. So if what you want to do is pursue a job right away, is the job that you're taking, is it going to be where you are, or do you have to move to a new city? And if so, you do have to take into considerations all of those expenses that are going to come with that. Especially, the cost of living, right? Rent, all the utilities, the food, and everything that you gotta provide for yourself. Especially again, if you are leaving your town and you're moving into a bigger city, again, depending on where you are. So, and it is important to also know and understand that how you're going to manage your student loans if you do pursue the path to go to college, and if you get loans, how are you going to pay for those? There's one thing for sure, and I think for those that attended last week webinar, we talked about one of the items that we talked about was bankruptcy, and how there are certain items that you cannot include in your bankruptcy. And believe it or not, student loans is one of those. So know that once you get your degree, once you leave school, their expectation is that you have 6 months to pretty much enjoy yourself. But after 6 months, you are expected to start making payments towards your student loan. So it's something that you got to keep in mind. And if you don't have, the means to pay for it, you better believe that you're going to have to reach out to whoever provided the loan for you, and maybe talk to them about creating a path or a payment plan, so that you are able to stay on top of the debt that you accumulated while you were in college. So some of the things that you definitely want to keep in mind. Moving on, this is a beautiful transition. I would like to throw myself in this one, and that is expanding family. For those that I think I might have shared with you all early in the year, I'm actually expecting our second baby. It's supposed to be here by the end of June. And so if you are like me and your family is growing, this is something that you do need to prepare for, especially if you are becoming a first-time parent. And the reason why I say that is because kids are expensive. As always, I do like to provide, like data, some of the reports that we obtain, and this is something that we actually received, that we obtained actually from the USDA. I'm sorry. It estimates that a child will cost an average of about $13,000 per year to raise your child. But again, we also know that depending on where you live, that number can actually be a lot more than 13,000. So, but in average, the USDA provides the medium number for us to look and see those reports, and their estimate is it's about $13,000 that you need to raise a child. So that's pretty costly if you ask me. So know that when you're planning to expand your family, you will definitely want to consider many things, including the additional medical costs, food, potentially formula, clothing, diapers, childcare. There is another report that we received from the government that tells us that in 2021, listen to this, in 2021, I know this is a little old now, but I'm sure the numbers are pretty much very similar. But in 2021, the cost of childcare was about 4,800, between 4,800 and $15,000 for an infant. Um, that is a scary number. It truly is. I mean, between 4,800 to $15,000 for an infant, and the expenses that you will be paying for childcare. That is pretty high in my opinion. I'm living proof of that. I have a 3-year-old, and boy, I tell you, it's not cheap. My daughter's getting ready to start school in the fall, and I already sent a check for a little bit, almost over $7,000 for her first year tuition. So pretty expensive. So some of the things that you definitely want to take into consideration if your plans are to expand or start or grow your family. So definitely keep that in mind. Another transition that we want to talk about today is, career changes, right? So if you're considering, pursuing a different role, a different position with another company, or even better, if you want to start your own business, it is essential to understand, how that is going to impact your cash flow and your personal finances. Especially if you're considering about, starting your new business, a whole new company, you want to understand and weigh the differences and the benefits in addition to the salary that will be coming in. If becoming a business owner is one of your goals, we definitely want you to do your research. Obviously, consult with a small business consultant if needed. But definitely reach out to the SBA or the U.S. Small Business Administration. They have a lot of resources. They can help you out and assist you in your journey of becoming a business owner. I highly recommend that you reach out to them. They even have loans that they can assist you with for a brand new business. So the options are endless. So again, but the most important part here is that you have to do your research. You have to know where you're getting yourself into, and know what kind of impact that's going to have in your finances. So very important to know that. The next transition, and this is something that I feel that we talk in almost every other presentation that we do here as a webinar, and which is great. And that is the famous R word, right? The retirement. Which we know is one of the most significant transitions for everyone. This is something that we hope everyone is preparing for. And if you haven't done so, if you haven't started planning for retirement, I tell you what, today is the day to start planning for it. It is never too early to start planning. It doesn't matter how old you are. I know I talked about high school graduation, and if you just got out of high school and you're now going into going into the workforce, or if you're going to go to college and pick up a part-time, please, start thinking about retirement. I know it sounds far, but believe it or not, time flies, especially when you're having fun. So again, you don't. It's never too early to start planning on retirement. If you're already getting close to that age, or retirement age, we definitely recommend everyone to sign up to receive your annual Social Security statements. And if you by looking at that, it's going to give you an estimate as to the amount of money you can expect to receive once you retire. Keep in mind, currently you can start drawing on your Social Security, I'm sorry, as early as 62. But obviously, if you do that, you're going to receive a smaller amount if versus waiting for the full retirement age. And notice if you were born um, in 1960 or later, your full retirement age as of now is 67. So that's the magic number, 67, if you want to receive full retirement benefits. But again, you can start getting those early benefits at the age of 62. But if you're like, I know so many people that you know they say age is just a number and they're already into their 70s, but they still want to continue to work. You may do so. Again, you know, if that's something that you want to pursue, by all means. And just know that you definitely want to reach out to Social Security benefits and make sure that if you do decide to continue working, what kind of impacts that's going to have on your retirement. So definitely, you know, you want to be mindful of that and consider, you know, carefully, you know, what impact, if any, you will see whether you decide to continue to work if you're, you know, if you still continue to work after you're 67. So something to keep in mind. And for those that have a 401k or 403b or a 457b plan, obviously it's an ideal way to send money aside for your retirement. This is pretty much what most of the private and public sector companies will do for you as part of the benefits whenever they hire you. We highly recommend that you maximize the matching. If the employer that you work with, they are offered to match up to, you know, a certain percentage, make sure that you take advantage of that and do not leave any money on the table. I hate to see when people you know don't take advantage of this particular option if they're getting a match, a percentage that is being matched for their retirement, and they don't do so. They just, you know, they're like, oh no, I'll do something else, or I'm going to rely everything on my Social Security. You know, you don't want to do that. And the reason why I say that is because if you don't do that, I mean, in essence, you're just leaving money on the table that you don't want to do. Especially again, you know, if you want to, you know, enjoy retirement and have additional sources of income once you retire, you know, having a 401k or retirement account handy will definitely be very essential for you especially when you start planning and you start creating your budget for once you retire. So very important to keep that in mind. And if you are almost there, whether you are already 61 and a half or you are 64 and a half, we always tell everyone that at least 6 months before retirement, that you definitely want to create a budget, a new budget. This will what we call your retirement budget, and it is important to follow it, and maintain all your expenses with a new budget. Obviously, you know, this is going to help you identify and some of the expenses you probably might have forgotten, and look for areas that, you know, that you can make adjustments if needed. So again, know that as you transition into retirement, it is important to participate. It's important to anticipate potential changes in your lifestyle and health. The first few years of retirement, you know, is going to bring a list of things that you always wanted to do. And obviously, you know, hopefully you're healthy and your health is going to allow it. But if not, I mean, remember, you know, as we get older, it is almost inevitable. You know, you might start having perhaps a couple of health complications here and there. So it is important that we budget for that, that you do have a health savings account set in place. Should something happen, you know, like will you be able to still receive medical benefits and still have an account that is specifically set aside to cover all your health expenses? So definitely some of the things that we highly encourage everyone to keep in mind, you know, once you start talking about, you know, and thinking about retiring. So very important to remember those things. Now let's move on a little into the next transition here. This one here, I know it's not one that a lot of people want to see, but you know what? Let's talk about the elephant in the room, and that is divorce. Divorce. Obviously, we can all agree that if you happen to be in this situation, this will definitely disrupt almost every aspect of your life, including your finances. This is a very difficult time to navigate, and not something that you can always prepare for, unfortunately. So you definitely want to take some of the necessary steps once you determine, this is the path that you will be going down. And if you're going through a divorce, we highly recommend that you seek legal advice about your finances and what you are and what you are not allowed to do until the divorce is finalized. That's very important. Having a professional guide you on the process and the steps that are needed to be taken is going to be essential for your financial health. One step you would want to take is to review your credit. We encourage everyone to obtain a copy of your credit report. Everyone is entitled to get one free copy now once a week from the three bureaus. So Equifax, TransUnion, and Experian. You can, pull those reports weekly now without paying anything. And the reason why we say that is because this is going to give you a better picture, a better understanding as to what obligations you have, and are those obligations, are they individuals, are they joint, or perhaps are you an authorized signer on some of those loans or credit cards that are out there. That's the reason why we want to make sure that we are reviewing the credit to make sure that there's you do take actions, especially if you have accounts that you are only an authorized user, and then there's no other obligation you have in there. And definitely, talk to your attorney. If it's okay for you to remove your name from any of those accounts that you are only authorized, and perhaps discuss, talk about, what impacts will it have if you decide to close some of those joint accounts that you might have with your spouses. So, and you want to do this again, so just so you avoid any charges being added, once you are already in the process of a divorce. And we all know that divorce, it's going to be a lengthy process, depending on the state that you live, and depending if you have kids that are under the age of 18, that every state might implement different time frames. I can speak of Virginia here. In Virginia, I know that if you are single, if you don't have no kids, you can actually get a divorce in 6 months. However, if you do have kids under the age of 18, then they make you wait 12 months before you can actually get divorced. You can actually file. So those are some of the things that you definitely want to take into consideration. Also, and I feel like we talk about this also very frequent here, and that is the option to freeze your credit. Please, please, please have your credit frozen. It will save you a lot of headaches, especially if if your spouse or your ex is somebody that was not careful with their finances, and they might want to obtain credit under your name. You definitely want to protect yourself and avoid any headaches down the road. So please, 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 make sure that you do put a block on your credit so that no one can access your credit. So if there's any particular loan that is being applied for, that loan will not be approved unless they reach out to you and talk and confirm that in fact you want to apply for that particular credit. So before I forget, annualcreditreport.com is the website where you want to go to obtain a copy of your credit reports for free, as I stated. And that is definitely what you want to do. I know now that we got the elephant out of the room, let's go on and talk on a different transition. This is a little bit more delicate in my opinion. It's just because it could happen to anyone, and that is the loss of a loved one. And we all know that if you are going through this transition, this is definitely a tough period in your life, because you're already experiencing grief, and now you're going to have to manage the finances on your own. It is, if possible, trying to create a plan in advance is going to allow you to focus on yourself, or allow your loved ones to focus on themselves during the grieving process. So I know that this is definitely a tough one, but it is important to know that you can start, acting on this particular process by seeking legal advice to create a will or trust. So if God forbid something happened, you already have something in place. The goal is to, by having a will or a trust, the goal of that is to ensure that your assets and your possessions end up where you want them to be, right? You work hard, you put so much effort, and you obtain whatever you obtain. And now, if something happens, whether it's you or someone, your life partner, you want to make sure that they do have this in place. And this will definitely make life much easier. If this is something that you're going through, having that will or trust in place. But again, this is something that we highly recommend that you talk to an attorney for, that they can help you draft a will or trust, and have that in possession, and ready to go. God forbid something was to happen. So again, we all know that if for some reason you don't have anything in place, especially if you have accounts and your name is not on that, and somebody passes away, for sure you won't be able to have access to those funds immediately. Most likely, again, depending on the state, there's a waiting period that you have to wait at least. I know here in Virginia it's 45 days that you must wait in order to take any action, if somebody passes away and then you're the next of kind. And then it's a 45-day waiting period for you to go and talk to the court and then get a letter, and take that to the bank and be able to withdraw the funds that they have on that particular account. And then with that being said, it is important that that if you do have accounts, that you start thinking about perhaps adding beneficiaries to those accounts. And if you do so, again, it makes life a lot easier. Another option to consider, it's also designating a power of attorney or a POA. And this is something, a POA is going to be very important. Per the Consumer Financial Protection Bureau, having a financial POA can be used as a tool to help plan for the future, including the possibility that you'll be unable to make important financial decisions due to dementia, traumatic brain injury, or another impairment that could affect your mental function. So when you use advanced planning, POA generally is durable, meaning that it continues to be effective even if you become incapacitated. So naming a power of attorney, it is important, as you want to ensure that they have your best interest in mind and not take advantage of their position. So definitely important that whenever you are creating that document, you consult again with an attorney, and the person that you grant those powers is somebody that you truly trust, and that they will not, take advantage of those powers that are given to them once they are designated as a POA. Next, obviously, it is recommended that you inventory all your valuable assets, including any properties that you have, any vehicles, jewelry, to name a few. Then you can determine how you want to use these assets. For example, if your income has decreased, can you sell some of those assets to generate income for more cash flow? You will also want to inventory all your financial assets, such as your checking, savings, CD accounts, any investments, annuities that you may have. You definitely want to inventory all of that and make a list of each one, where they're located, beneficiaries on each account, and the rate of return of investment, and have this available and handy, because as Eddie alluded to, I've been in the banking industry. I know it might not be a lot, but in 17 years, you'd be surprised of all of the different scenarios that I've seen, where I have families coming in and talking to me and asking me, hey, about 5 years ago, I saw that my dad or my spouse received a statement from you guys. Does he still have an account here? Can you check for us? We already went to about 10 different financial institutions, and we're just trying to gather information. So that is something that is it's definitely tough. It makes it really hard for the families to have a clear picture as to where you might have assets, and you don't want your assets to end in the state for sure. So definitely, these are some of the recommendations that we make. For those that like to prepare in advance. And finally, it is important also to list all your debts, including any secure debt that you have, anything that you're using your collateral that is attached to. So anything such as your house or any cars, you definitely wanna create a list of all of that. Also, any personal loans, credit cards, medical bills. You want to document who and what you owe, as well as any helpful details like account numbers and other owners that might be on those accounts. In my opinion, I think this is probably one of the most complicated transitions to go through. It is definitely tough, but you can also, again, always prepare ahead, always have a plan in place. We all know that we're here today, but if you're me, myself, I'm a man of faith. I know that I know the day I was born, but the day that the Lord decides to take me, I have no idea. So I always like to have something in place and ready to go should something was to happen. So again, I know it is definitely a tough transition to be going through, but I think it's one that we all must prepare for and have a plan in place. With that being said, let's move on to the next transition, and this is going to be the disability transition. So if you or someone in your house and your house becomes disabled and can no longer work, obviously, we understand that it's going to have an impact on your finances. You might feel overwhelmed or frightened and not know where to turn. So take time to process what's happening, including any anger. I mean, we understand this is going to be upsetting. You might be going through grief or other emotions. Once you're ready, you want to seek legal advice right away. An attorney might be able to assist you with applying for benefits like Social Security, disability, or workers' compensations. And just know this, that if you go through a disability or workers' compensation, this is a process, and the process itself oftentimes can take a lot of time. So we want you to know and take that into consideration. But know that there's always resources, there's always avenues that you can explore if disability is something that you're experiencing. The next one here is going to be that reduce of income, or perhaps become unemployed, or maybe you got your hours cut, or if you are depending on the industry that you're in, and your company decides to go on a strike. You will obviously, we know that if that happens, it's going to have an immediate impact on your finances. Most reductions or losses of income cannot be anticipated ahead of time. But if you happen to be in a company that goes on strike, there might be some warning signs that you might see in advance that perhaps may give you time to start taking steps to prepare ahead of time. So if that's the case, you want to start by finding out if you're eligible for unemployment benefits, determine the process, how to apply it in your state, how long would you be eligible for the benefits, and once approved, what is the amount of money that you will be receiving. So you will also want to determine any savings you can easily access and consider all the assets you have to use to supplement if needed. Next, we'll discuss additional steps you should take to manage any transition. And again, as I stated before, this particular steps on how to manage any transition definitely apply to everything that we just talked about, including high school graduation, including divorces, love of if you lose someone. This next steps here are definitely, you can implement it in any different life scenario that you might be going through. So with that being said, how do we go about it? So first, you need to determine if that transition is a short term or long term. This will be important as you determine and proceed through the next steps. It's the first thing that you definitely want to do. Identify How long is the situation going to last? Is it going to be for a couple of months, or is this something that I'm going to have to live with for the rest of my life? So definitely take that into consideration. You also want to consider all potential income you can count on. Keep in mind, it may take time to be approved for unemployment benefits and for them to start. It may also take a lot of time to be approved for disability, as I stated before. And so those are things that you definitely want to take into consideration. Are there any other sources of income in the household, and how much is received every month? Will you receive a severance package? Do you have the ability to work part-time, or perhaps start a side hustle? Keep in mind how this might impact the benefits that you might be receiving. Also, understanding our debt obligations and determining their priority is necessary when dealing with a transition. Very important. Secure debts that have collateral attached, like your mortgage or car loans, are typically high priority. You definitely want to prioritize that over anything else, especially if you're thinking about, credit cards or any personal loans. If those are unsecured loans, you definitely want to put those at the bottom. Any loans that have a collateral, especially if it's your house, you definitely want to make sure there's one thing, make sure that you always have a roof over your head, I'm sorry. So with that being said, we recommend that you first you pull a copy of your and any financial partner's credit report. The place where to get your credit report, again, as I stated at the beginning, it's annualcreditreport.com. You can pull the credit report for free for all the three bureaus: TransUnion, Experian, and Equifax. And now, as I stated also, you can actually obtain a free copy on a weekly basis. So every week you can obtain a free copy of your credit report. I wouldn't recommend doing it on a weekly, but at least no more than 6 months, ideally 3 months. Just keeping track and see what's happening with your credit report. You will also want to review any statements you receive for your debts. Make a list of the creditors, current balances, minimum payments, and the interest rate that you're paying. You should include all obligations, including mortgage, home equity, auto loans, recreational vehicles, personal loans, student loans, credit cards, medical debts, and collection accounts. This information is going to help you create a budget and determine how to prioritize. If you are attending today to start preparing for a future transition like retirement or a new baby, this is a perfect time to focus on debt reduction. If you're interested in talking to our nonprofit partner, I think we talked about them last week. I'm sorry, and we do have a partner here at the United States Senate Federal Credit Union. Jesus Christ, I guess it's getting a little late here for me today, so my apologies on that. So we do have a partner. They are GreenPath. They are a nonprofit partner who provides certified financial counselors, and they definitely can assist you understanding your options. They can also determine what's the best plan that they can put you to manage your debt. If you want to reach out to them, Carrie, can you put their phone number on the chat? Their phone number for GreenPath is 877-337-3399. Again, the number is 877-337-3399, and they are GreenPath Financial Wellness. They can definitely assist you and start creating a plan to reduce your debt. Also assist you with any life transitions as well, as we were talking during previously here as well too. So with that being said, now that you have determined your financial pieces needed to help you move forward, it is time to prioritize everything. You will want to create an emergency budget and align it with your priorities. The goal is to take everything out of your budget that isn't absolutely needed while navigating this time of transition. These are decisions that you and your household need to make together. It's important. And the budget should start with all the necessities first, right? So you want to look at the spending, all the spending that you do for convenience. How many times have you stopped to pick up food because you had a long day, even though you had food at home that you could have made a meal with? That's definitely something that you want to keep in mind. And know that an emergency budget is just that. It is what you absolutely need to support your household through that transition. So it is important to be mindful and know that, again, depending on the type of transition, how long is it going to be, know that ahead of time. And with it, a budget will definitely be the best resource that you're going to have handy and available for you. And obviously, now that you have your emergency budget, tracking your spending is just as important to ensure that you follow it. So if you continue to spend money on items outside of your emergency budget, you will likely, most likely, in my opinion, going to run out short on the money to cover for the priority expenses. So we had talked about here in previous webinars about different methods that you can use. One that I want to talk about today is going to be the envelope method, which is, in essence, it's all you do is you create an envelope for every category and put the money there and only use the money for that specific category. If there's no more money left, then too bad. There's nothing left and there's nothing else you can do. So be mindful of that. Also, we recommend using perhaps Excel spreadsheets to track all your spending. There are a lot of templates in Excel that you can use. Also, there are multiple apps that you can find on the Google Store or Apple, depending on what devices you have, mobile devices you have. But be sure that when you select in one, that you don't pay for them. There are many apps that can help you track your spending that are completely free. Please do not pay on items that you don't need, including paying for an app that's gonna, in essence, gonna do what a free app will do for you, which is just help you track all of your spending. So keep that in mind. Also, we know that whenever you go into a transition, it might be a tough time, and then we can all agree on that. So we wanna, if we want, what we want to do is obviously you want to surround yourself with family, friends, and professionals, and somebody that can give you that support that you need to manage any transition. So being able to communicate your feelings, needs, and fears will give you more confidence in how to move forward. So this is very important, extremely important in my opinion. So if you struggle to make decisions and are unsure how to prioritize your next steps, communicate that to anyone who will be part of the transition. Involve your household in determining what the needs and the wants will be. Very important. So for instance, if you're looking to replace and get a different job, you may feel that you need to purchase clothing for your interviews. However, your financial partner might be concerned about that you're using money to go buy a suit that probably you're going to drop $200, $300, $400, $500 for it. You can use that money perhaps to pay for your car loans or mortgage or go get groceries. So what are some of the alternatives, right? Can you go and get and go to a thrift store store and maybe get something from there or even rent it. We all know there's different options that you can do, but you can use. So you don't have to go in and spend a lot of money in buying an outfit for an interview. And so again, be very mindful of that. Next, if you have a financial partner, you want to determine who will take responsibility for specific steps. Communicate together which items each will do and the timeline for when they will be done. So if you're doing this on your own, try to find a good friend or an extended family member who will be there to talk with you. Give them permission to check in with you. This will keep you on track and hold you accountable for your timeline. It's very important. Now, let's talk about dealing with debt. This is the toughest part, and it's something that I'm sure everyone want to make sure that you'll have the right resources for. And let's dive into it. So one of the options that you may be considered when dealing with any life transition is perhaps perhaps take a look into a hardship program. Believe it or not, most credit card companies, they offer those. And what they do is they actually don't advertise them. All you have to do is pick up the courage and call them, tell them what's happening, what are you going through, what kind of situation you are, Is this something that, again, as I stated before, is it a short term? Is it a long term? What options do they have available and how they can assist you? And you might be surprised. They might be able to help you with perhaps reducing some of those fees that they charge you, maybe lower the interest rates, and maybe waive some of those late fees that they assess because they didn't know what was happening with you. So be very mindful that there are perhaps different programs that you can talk to that there might be available to you, but you just don't know about it. So again, pick up the phone and reach out to all the creditors and ask about, if they have a hardship program, and obviously be honest and tell them what you're going through. Absolutely, something that we recommend everyone to do. Another option to consider is going to be asking for forbearance. Typically, this may be an option for a mortgage or a student loan, but it could apply to any type of loan as well. So essentially, a forbearance it's a temporary postponement of your loan payments. Some forbearance plans could allow you to not make any payments for a number of months. Typically, it's about between 2 to 3 months. And if so, they might ask you not to make any payments or only ask you to pay the interest or taxes only, depending on the type of loan that you have. And obviously, this is something that you will need to negotiate with the lender. And just like a hardship program, be sure to discuss the need, how long will it last, and what are you asking for, right? So once again, be sure to keep detailed records whenever you are making those, having those conversations. The third option that we want to talk about here is going to be the loan modification. And just for those that don't know what loan modification is, in essence, this is when the lender changes the term of an existing loan. It may consist of a change of interest, perhaps extending the terms of the loan repayment, or in some cases, creating a new loan to pay for what you're going through at that moment. So typically, a loan modification are used for mortgages. However, any type of loan can also be offered depending on the lender and the type of program that you're in. So just know that a modification it's different from a forbearance, since the forbearance is something that is more of a short term, and the modification is something that most likely would be for a long term. So be sure to obtain any modified loan terms in writing. Ensure that you completely understand the terms of the modification and what the changes you are agreeing to, what do they mean to you, and for how long is it going to have an impact on your finances. So very important to keep those things in mind. Now, with that being said, as I said at the beginning of this presentation, you don't have to go through this alone. Life transitions that impact our finances are typically very stressful. That's something that we can all agree. And in many cases, challenging also. So we want you to take advantage of any help from your family, friends, professionals, and your community. Also, there are many resources available to give you the extra boost you need until you're back on your feet. We all know that, depending on where you're going through, there might be tough times, but you're not alone. There's definitely resources there, especially, within your inner circle. You definitely want to make sure that you have somebody that you can trust, you can talk to, and ask for guidance. As far as the resources that we want to provide for everyone here, if you are out of work due to a fault of your own, due to no fault of your own, so just know that you most likely might be able to apply for unemployment benefits. These benefits are provided for a temporary financial assistance for unemployed workers. You can, we're gonna send you the links here for how to obtain more information on this presentation. But also, if you have become disabled, you definitely want to reach out to your employer to discuss any disability benefits that you have through them. If you have a private policy, you definitely want to reach out to start the process of applying for the benefits. And if you are permanently disabled, this is when we recommend that you talk to an attorney about applying for Social Security disability benefits. Highly encourage you to do so. Also, health insurance, we know that that's extremely important. and you definitely don't want to, you want to avoid paying additional costs while navigating a transition. So if you have lost your employer paid health insurance and need to replace it, you have options. The most common one that I'm sure everyone sees is going to be Cobra. So Cobra, this was per the U.S. Department of Labor. This in essence gives the workers and their families who lose their health benefits. It gives them the right to choose to continue the group health benefits provided by their employer for a limited period of time under certain circumstances, obviously. And also know that you can also go to um, give me 1 second here. Just lost my train of thought here. You can go to healthcare.gov, where you can actually shop for medical coverage through the federal government. So if you want to do that, you might qualify for lower costs depending on your expected household income for the year. So definitely something that you want to take into consideration. Also, Medicaid, that's another option that might be available to you. They provide free or low-cost medical benefits to eligible adults with low income, children, people who are pregnant, and people who are 65 or older with disabilities. So you will apply with the state that you live in, and every state has its own requirements. So I highly recommend that you go and talk and then research as to what type of requirements they have in order to receive Medicaid. Another great resource, it's going to be 211. So 211 is a great service that provides individuals with confidential, comprehensive sources of information about local resources and services across the country. They can provide information on housing, utilities, food, healthcare assistance, and much, much more. And if you are in a financial transition, don't forget to talk with your financial institution. We may be able to offer you hardship assistance with debt that you owe, or look at other loan products and other resources that might be available to help you get through your particular transition. And finally, don't forget to consult with your financial counselor. A nonprofit agency can provide you with free and confidential guidance. They can help you create a budget, discuss ways to track it, review mortgage and student loan options, and discuss options for handling your debt. As I stated before, we do have a partnership with GreenPath, and this is a nationwide nonprofit that provides financial education, tools to empower people to live a better financially healthy lives. And they provide certified financial counselors, no cost. You can set up your appointments, and they can assist you with the different programs that they have available. With that being said, this is going to bring me to the end of my presentation. I truly hope that this was helpful. I know I share a lot of information, and Eddie, let me know if there's any questions on the chat, and Andrea. And I know Kim is not in today, but I've been told that Carrie and Eddie will be answering questions with me today. So we are ready to go. So Andrea, what are some of those questions that we have? Let's tackle them.
Okay, so the first question is confirm if there are no beneficiaries on the bank account after a waiting period. The next of kin can get a letter to get the funds. What if they have 2 kids? How do they determine whom to write the letter for?
That's an excellent question, Andrea, and this is something that I was talking about. So if there's nothing, so if there's no trust, if there's no will, it's hard it's hard to determine, who will be the next of kin, and who will be able to receive the assets in this case. Normally, we recommend that you do go to the court where the person lived and consult with them. One, they're going to be able to check for you whether or not there's something in their systems, and if not, they will be able to provide you with an actual form that will be notarized, and then you can bring that along with a death certificate to the financial institution, and then we can use that to disperse the funds. Now, in many cases, if there was no one that was assigned, It's always it goes down by the list. So if the person was married, it will be the spouse. So that person will be the person that will be eligible to go ahead and close the account. If not, then what's going to happen is that we will be required to close the account, and we will give you a check, but the check will be made payable to the state. So this is something you're going to have to bring over to the court and have the court assign and go through the whole process. It's something it's a very complicated process. It's something that, again, that we hate seeing, because in many cases, that could have been avoided had that person, prepare ahead of time and have something in place. So, but know that you do have options. But if the person was married and the spouse is still in living, then that person will be eligible to receive the full funds. If not, if there are kids involved, then especially if there are more than one, then you will have to file that with the court, and then they will have to create a state for their behalf, and something that in some cases we actually recommend that you consult with an attorney. But you do have to wait at least 45 days in order for you to take action and take those steps.
Great, thank you. The next question is, if I plan on retiring at the age of 62 and I have a 401k plan, what is the recommended amount that should be in your 401k plan before retiring? Thank you.
Oh, that's a great question. It depends on how much money you make. And again, Eddie stated that I do like to talk about some investment products and whatnot, but I can get in trouble for doing so. But it is recommended that you definitely want to have. I know the goal is to it's by the time you turn 40, you definitely want to have at least 3 times the income that you make on an annual basis. So hopefully you started with your 401k at an early age, and then you have saved enough money. But again, it all depends on how much money you're making on a yearly basis. So, and also what kind of a situation you're in. And also know that there's limitations that are in place as to how much money you can set aside that you can put towards your 401k. So everything has limitations, but mostly it's going to be attached to your income, how much money you're making. So that is definitely something that I would highly recommend that you set up an appointment with a financial advisor. He can sit down with you and talk to you and perhaps review your 401k or your 453, depending what type of plan you have. That would be something that I would highly encourage you to look into and see, perhaps how much money you should have by the time you're turning age. And so when that 62 or 67 magic number hits, you're prepared and ready to enjoy retirement.
And I think that's a great segue to read one Mr. Juan said on the comments. He was like, remember, for anyone over the age of 50, you can add as much as 7,500 to your retirement. Current 401k allow for 23,000. So given time, this will add up to a lot. And the 7,500 is to catch up for those early years when you couldn't put as much in your early years. So wow, I think that's a great tip. Mr. Juan, thank you for sharing your wisdom. We really appreciate it. And personally, I've been taking tips from you, to be honest with you, to how to save money, how to cut debt. Like, you always got amazing things to say. So thank you very much for that comment. Milton, I think that was a great comment, correct?
Absolutely, 100%. I totally agree with the statement that Mr. Juan shared with everyone. You do have that the amount that you can contribute as long as you're 50 or older, and your 401k or any retirement plan that you have, doesn't have the amount of money that you wish you had. But know that, again, there are tax laws that you have to follow, that you have to obey. And you don't want to be, penalized from Uncle Sam for doing something that you weren't supposed to. But in most cases, the financial institution will let you know and tell you, sorry, you already the capacity as to how much money you can contribute towards your retirement. So, but in some cases, If you have multiple financial institutions and they don't have a communication between the two of them, that could be something that might turn into a headache for you. So definitely want to keep that in mind.
And I think it goes with what you were saying in the presentation, Milton. Communication is key, especially when it comes down to doing things regarding your retirement, your 401ks, your IRAs, whatever it is. Make sure that you communicate what are you planning to do with, us, and then we will let you know if you're allowed to do it or not. As you were emphasizing for what Mr. Wong was saying, is if you're over the age of 50. So, Andrea, just because you feel tired doesn't mean that you're 50 yet, so you gotta be legally 50 years old to do something like this. So thank you very much. And sometimes it might sound scary what do you want to do, or you might have like curiosity, or you might have doubts, but it's just a matter of communicating what you're trying to accomplish. And that's the reason why the United States and the Federal Credit Union, we're here to make sure that we help you and we give you guidance to reach your financial goals and dreams.
I have a
And also-
question.
Go ahead, Karen.
Milton. To piggyback off of the first one about adding the beneficiary on the bank account, how do you do that for the credit union? Like if I should know, right? But like if I want to add my son or something and avoid all the stuff that you were talking about, do I call or what?
Yeah, no, it's very simple. You can actually just you can do it from the comfort of your mobile app, or if you go to your online banking, just shoot us a message and let us know that you want to add a beneficiary to all, or you just want a specific account. We will go ahead and fill out a form for you and have you sign it, send it back to us, and that's it. Simple.
Does the beneficiary have to do anything, or do you have to?
No, the beneficiary does not have to do anything. All we need from the beneficiary is going to be the name, their birthday, social security number if you have it, and that's it. They don't need to know. And that's the beauty of adding beneficiaries, is that they don't need to know that they are added there. And obviously, especially if you're young but depending, right? But they don't have to know. But in the event of something happens, again, as I stated, when you're putting that, when you're documenting everything, having the list, and share that with someone, right? So no, especially if you wanna be brave and go ahead and create your will, you can put all that information in there. All that information can be added, and then state it. These are the accounts that I have. These are the beneficiaries that I have in every account. So this is who gets. This person's gonna get this account. All of that assets goes to them, and so on. So and then once you have the will, and then that your name was added, it is very easy to go ahead and claim those funds by simply just bringing a copy of the death certificate and your ID. If you do that, if you're a beneficiary, we just need a copy of the death certificate and your ID, and then we'll go ahead and cut a check and give you the money to you without asking more questions.
And having all that set up would not require then the 45-day thing that you mentioned?
If you're a beneficiary, no, you don't. Just as long as you have the death certificate and your identification that you're the beneficiary, that's all we need.
Oh, thank you.
Yeah. And this applies to all financial institutions, by the way. This is comes from a guy that I have worked for. Let me see. I worked for 3 banks and 4 banks, I'm sorry, and 2 credit unions. So it's about, and every one is the same. So nothing changes. It's either black or white. So nowhere to get lost.
We had another question come in. How can I accelerate my mortgage payments in advance of retirement? I have 3 years left on a 15-year mortgage.
That is a great question. And believe it or not, a lot of people might not know this, but send your regular payments and separately on a separate check, send a different payment, or if you do electronically, make sure that you do send the additional amount that you want to pay, but inform the financial institution or whoever has your loan that additional payment that you're making is going towards the principal. Do not add it as a big chunk, as a one payment. So for example, if your mortgage payment, I'm just going to give you a random example here. So if your mortgage payment is $2,000 and you have an additional $1,000 that you want to send, Do not put it in all into one single payment, because what happens, that $3,000, it's gonna go into two different ways. One portion goes to interest and the remaining goes to the principal. And for those that are familiar with how loans work, most likely the biggest chunk of money goes towards the interest first, and anything remaining will go towards the principal. So if you do that, if you just send one single payment, everything will be sent. Most likely the majority of the additional payment will go towards the interest, and only a little bit is going to go towards the principal. So what you want to do is you send two payments, and you notate it into the system, or if you are writing those envelopes, just stay there that this is principal only. And that, by doing that additional $1,000 will go strictly to your principal, lowering the balance that you owe and being able to pay off the loan way sooner. So again, it's key that you are splitting the payments, send it into two, be specific, this is the regular payment and an additional payment, but it's going strictly straight into that principal balance only.
That was a great tip. Thank you, Milton, for, advising that to do that principal payment. And the key factor that he was talking about was do it as a separate payment. Otherwise, it will be included in your regular payment. So please make sure that you notate that you will do your principal payment. And, for the person that asked that they have 3 years left on their mortgage, congratulations to you. That's definitely a big accomplishment. And, we were just talking about life transitions and accomplishments in this presentation. So the fact that you're almost there, we're so happy. And we like when our members share testimonies like that, because that's what we're here for. We want to, be there for your needs, but most important, we want to be there for your victories. And this is definitely a victory. So hopefully if in 3 years, we're still doing season 5 of the weekly Wednesday webinars, hopefully you can tell us, I finished paying my mortgage, and we can celebrate with you. So thank you very much for that. And then what is next week's webinar? Anybody on the panelists would like to share, so we can extend the invitation to our attendees. And thank you very much for being here with us. I know we went over the time, so thank you very much. So I saw Carrie open her mouth, so we will give the word to Carrie.
So next
Thank you.
week's webinar is on 529 plans, saving with one, because it just so happens to be 529 day. So on May 29th. And our expert speaker, so Milton mentioned him a couple times, our partners at Fellows Financial, Michael Schimmel, he's an expert on 529 plans, and he's going to talk about all the new rules, like in laws, and about, with the Secure Act, and then, rolling over into an IRA and all that stuff. But that one, instead of being at 6, like all of the webinars are, this one is going to be at 3 p.m. So I hope you'll join us and bring your questions.
Bring all of your questions. It's going to be the same programming, different topic, different time. But, we're just so excited to have, Michael with us. It's going to be definitely a great experience. You definitely are going to learn something new. There's always something new to learn, so we're extending that invitation to you all. Somebody was asking earlier if we do these webinars weekly, and the answer is yes, we do these webinars weekly. It's usually at 6 p.m., but sometimes we have, a special programming, like next week we'll do it at 3 p.m., but it's always different topics. And every topic that you see that's being presented, the presentation is organic, the graphics are organic, and the content is organic. So everything that you see is organic. So please join us, because without you all, this wouldn't be possible. So thank you